Good morning, everybody. Welcome to the ARMR Report. Today is June 18th. Thank you for joining me. As always, ARMR stands for Algorithmic Risk Management Research. That's a mouthful, but basically what I'm saying there is we use algorithms on our trading desk to manage our risk, and I try to share that information with you. This is a live trading desk. I'm your host, Brett Rosenthal. Everything I'm sharing with you, I use every day managing my own capital. I like to call these educational lectures. I'm not telling you what stocks to buy. I don't know you. I couldn't help you manage your specific risk. Okay. What I can do is share with you what my experience has been for 30 years and how I manage my own capital. And hope that you could take something away from that discussion to help you more effectively manage your own. Today's stream is going to be about the cannabis investing theme. It's one of our investing themes that we consider to be most important going forward. I call it that we're at the cusp, at the very beginning of an investing super cycle in cannabis companies. So on our YouTube account, if you will, subscribers can subscribe and watch 3 different types of channels. One is about cannabis, one is about stock market investing, and one is investing for beginners. So this is the stream and on the playlist for cannabis investing. We're going to go over the Acreage Canopy deal, okay, and its implications for all of the MSOs, multi-state operators, all of the dispensary companies, all of the marijuana companies in the U.S. I'm going to break that down for you. Before I leap into it, don't forget this is a live trading desk. I may be distracted like I am right now because of what's going on around me. So just bear with me. All right. Those of you watching our live streams about stock market investing using algorithms and the bigger picture here are hopefully all enjoying the success that we talked about early June, and it just keeps ratcheting up. So I'm going to share with you a picture real quick of the market in general. Okay. There's sharing the screen. Okay. And what we've got here is the S&P 500. Now, I talked about this on the last call. You can go look at that playlist about how to invest in the stock market, what stocks to buy. This is the S&P. It's the ETF SPY. You can see here's our risk on entry point early June. And you see the market trying to make new highs in here in front of the Fed meeting. Okay, just a quick look there at what's happening in the markets today. Now, I share that with you because before I make any investment in the market, I don't care if it's cannabis related or not, I try to make sure I'm on the right side of probability and statistics and make sure the reward's worth the risk. And 7 out of 10 stocks follow the market. That's just a fact. So, at the beginning of June, market starting to move higher, we start looking for opportunities in cannabis. Let's get to today's topic. As of yesterday, the voting ended for the Canopy Acreage deal. The Acreage investors overwhelmingly said yes to this takeout. Everything looks like it's on track. I've been having conversations with both management teams, both companies, trying to track what's going on. It seems as if the shareholders have said yes to this acquisition. We should probably get an announcement to that effect sometime this week. Could be tomorrow. And then on Friday, these companies will go in front of regulators to get stamps on this process. Many a slip twixt the cup and the lip, obviously. Nothing's a guarantee. Something could come out of left field that disrupts this deal. But as of right now, this deal looks like it's going through. Let's just understand what's going to happen when it goes through. Acreage stock is trading at $19 a share right now. Based on the acquisition agreement, it should be trading at $24.36 right now, based on roughly where Canopy stock is trading. You just take Canopy stock price, $42 times 0.58, and you figure out that that's $24.36. So if there was a trigger event tonight, tomorrow the stock would be trading at 24 and change. Now, the markets never respond that quickly, but that's basically where we're at right now. That's about a 30% discount to the takeout price, which is a huge gap. But the gap gets even bigger because $300 million US is going to be paid to Acreage shareholders sometime in the first half of July, guys. That's next month. The shareholders voted yes. The regulators have to approve it. Once that happens, these companies will announce the record date for a special dividend to be paid to shareholders of Acreage. That dividend, depending on a whole bunch of factors, will be between $2.55 and $2.60 a share. Stock's trading at 19. Let's just subtract $2.57, let's say. Okay? If you want to understand where the price is. So subtract $2.57 from 19 and then look at $24.36 a share, and you see the gap is something like 50%. Now, I know there's no trigger event yet, so it's not going to close the gap immediately. But as this deal gets ratified, approved by shareholders, stamped by regulators, and then a special dividend is paid, what will happen, for those of you who are unaware of how this works in dividends in general, there's a record date, and then the next day the stock trades ex-dividend. So everybody who owns it on by the record date will get cash that shows up into their account in the form of $2 and let's say 57 cents a share, okay, in their account, dividend payment. And then the next day the stock trades down $2.57 because it's trading ex-dividend without the dividend. Okay, and at that point, you're looking at a $16-something stock when the takeout price is $24.36. That will only happen, that gap will close when a trigger event takes place. Trigger event could be a whole host of things that we really don't know, but let's put it this way. An event that takes marijuana off of the Schedule S1 listing that calls it, a narcotic, just like, cocaine or any other nefarious product. So any event that moves the federal government to take marijuana off of Schedule S1 will be a trigger event. And that gap will close in a hurry. And I submit to you, as time goes by, the gap will close little bits at a time. Because what's going to happen, after speaking with management of both companies and spending time chatting with Acreage just yesterday, these companies are going to hit the ground running when this deal is closed. They are going to be making a lot of acquisitions in U.S. marijuana companies. A lot of acquisitions. Canopy has stated that they want to be involved across the board in the U.S., and this is how they're doing it. Acreage has said they want licenses in every state. They have licenses in 20 states right now. Do your homework. Find out what states they're not in. See what companies that are public are active in those states. Okay? Focus on companies that are public and doing business in states that are recreational and medical use. These are probably, and I'm just spitballing here, but probably the businesses in the states that Canopy wants to get into first. So valuations of those stocks will begin to rise as Acreage is doing takeovers. Okay? This is a watershed event, make no mistake about it, for U.S. cannabis companies, U.S. marijuana companies. If this deal closes, it hasn't closed yet. Shareholder vote is a yes. Now we got to get regulators to sign off on it. And then sometime before the end of this month, if all that goes well, we'll get an announcement of the record date of the special dividend. Once that happens, guys, the deal's closed. It's done. There's been an overwhelming response, according to Acreage, of companies that want to be part of this Canopy Growth Acreage ecosystem. They're going to hit the ground running making acquisitions. And the way we value these companies for acquisition purposes is really based on a multiple of expected 2020 revenue. So you look at a company's business, figure out what you expect them to do in revenue in 2020, and then figure out how many times revenue Canopy Acreage will be paying for that business. If it's just a licensed company that doesn't have a lot of vertical integration, not a lot of grow behind it, maybe it's 2 or 3 times 2020 expected sales, because it'll require a lot of capital outlay from Canopy/Acreage after they buy that business. But if it's a mature company with a lot of grow behind their retail stores, you may see 10 to 15 times 2020 revenue as the takeout price. And so somewhere in between will be an average, right? Maybe 7 or 8 times 2020 revenue. And that's how you figure out projections. So you find companies, X amount of revenue that you expect in 2020. Let's say a U.S. vertically integrated MSO in one of the important states, Florida, Illinois, Michigan, Nevada, Colorado, California, Massachusetts. And maybe you project that company to be doing better than $400 million in revenue by 2020. Well, if they get taken out by Acreage Canopy, you're looking at a $4 billion deal. That'd be 10 times revenue. That's how you work up your numbers as expectations. And so the way this process works is Canopy Growth is going to begin through Acreage buying companies at X times revenue. And then Wall Street can start figuring out what businesses are worth. That's what's so great about this acquisition. It's more important than just owning Acreage and getting $2.57 a share in a special dividend. And that's all great. But what's really exciting to me is that institutions on Wall Street, investors, guys who are willing to take risk in U.S. cannabis companies, are having a hard time valuing the businesses. Well, when Canopy begins taking these businesses over at X times expected 2020 revenue, now we've got models. And now we can start seeing what companies are ridiculously undervalued based on the takeout prices. I've been here before, guys. I've spent 30 years in the business. I've seen this happen. When a big company starts rolling up and creating values, analysts can start creating projections and understand what the worth is of businesses. That's what's so exciting about this deal. So, to wrap up, voters have approved it. Now we have to get regulators to sign off on it, and then we have to get the announcement of when shareholders are going to get paid. Once all that happens, we know the deal's closed, and the excitement starts for me. I am going to be scrambling. I've already been working on this for a long time, so I've got my list on the whiteboard of U.S. retail dispensary companies that I want to own, right? And so when Acreage starts making these acquisitions and we start seeing what the valuations are, that's when you want to start putting these stocks in the portfolio. You know, investment ideas are great, but you need catalysts to bring in capital. Otherwise, you could be holding a stock for a couple of years and it goes nowhere, except for a lot of volatility, like the month of May. Okay? This deal closing is incredibly important to the whole space as an investor to speed up the process. Now, let me just say this. The month of May was a real sell-off for these stocks, totally typical. You know, I've already talked about this on previous calls, so I'm not going to go over it again. But what I'm watching real closely now from a timing standpoint is how does Canopy stock behave once this deal closes? Once they start making acquisitions that, let's be honest, are going to be dilutive in the short term, even though they say they're accretive. I mean, they might be accretive by 2020, but they're buying businesses that are probably losing money right now. So it's not going to be accretive right away. So does Wall Street like that they're taking over the U.S., or does Wall Street say you're diluting shares too much? I really watching that stock closely to see how it behaves. If it goes up as they're making acquisitions, it's very bullish for the whole space. It would be rare too, because usually the company doing the acquiring of businesses that are diluting shareholders of that company, usually the stock comes down in the short term and then moves higher over time as they realize their synergies. Okay. So it would be rare for a company to make an acquisition and their stock to go up. It happens. It happens. We'll see. So I'm watching that stock. I'm watching Telray, Kronos, Aurora, okay, Organigram. These are the top Canadian companies that have been struggling in the last month and a half. So in order to own a lot of U.S. companies, you got to see the Canadian stocks start to move higher, hold their 200-day moving averages and start to move higher, proving that institutions are supporting investments in the cannabis space. If those stocks break down, all this excitement I'm talking about means nothing. These stocks will go lower, especially U.S. companies. Okay? So this is very exciting, but it could take X amount of months before Canopy makes their first announcement of a deal. Acreage Canopy, right? I mean, they're not going to close this deal and announce that they've taken over XYZ, tomorrow. So it could take a couple of months. So the timing is not the issue of this conversation I'm having with you. It's the importance of what's going on in the business. Okay? I'm going to share with you on our next cannabis call a little gem of information about the U.S. cannabis business, that when U.S. marijuana is taken off of Schedule S1, will immediately make every U.S. cannabis company a lot more profitable. I mean, like literally overnight. Not all the obvious things you think, oh yeah, the business is great. No, I mean literally their earnings will go up significantly the minute Schedule S1 is dropped. And I'm going to share with you that gem. It's an often overlooked fact about the industry, but something you have to realize because it's about valuations. And the valuations go up significantly if marijuana leaves Schedule S1 for this one particular reason. I'm going to share that with you on the next call. Thanks for being here. Be safe out there, guys. Always think about whether or not you're on the right side of probability and statistics. The Fed's meeting today. They'll make their announcement tomorrow. The market's skyrocketing right now. We got a great risk on entry point early June, like I told you, and so we're making money on that. But it really comes down to, does the Fed say anything to derail this opportunity? Hopefully they won't, and we'll get paid and continue to get paid on our entry point risk on that started at the beginning of this month. The reason the market's skyrocketing right now is that the European Central Bank is just pumping cash into the system ad nauseum. It's just insane. I think I saw bond rates of French bonds are, negative interest rates now. I mean, it's out of control. So where else do you put money except for the stock market? And that's why the market goes up. So the only thing that can derail it will be the Fed. And I'll talk about that later this week. On Friday, I'll go over the Fed, the reaction to the Fed comments and how it affects our algorithms. All right, guys, have a good day out there. Take care.